Greetings and welcome. Dr. Scott Dell here for your accounting analysis course in the MBA program. This is the first in a series of videos that will help get you oriented to what the heck we're doing with accounting, what we're learning, what direction we're heading. And the first module we're covering, we'll talk about the why. We'll actually be doing two things. We'll be talking about the why we're studying accounting. We will also be doing a demonstration through the use of an income statement, do some analysis, because accounting is a lot of number crunching and analysis, in addition to understanding concepts, in addition to understanding the language of business, in addition to learning for your long-term professional development in your career, what business is all about. And accounting is a firm foundation that we build on. So let's start talking the why. If you're a Simon Sinek fan, you know about the why and the what and the how. But we're going to start with the why. Why the heck do we study accounting? So looking at accounting, well, the obvious is you needed to pass this course to get your MBA. So why do we make a requirement though? Well, there must be something in here that pertains to business studies that will make a difference in your future and in future courses as well before you graduate, as well as courses or your career after you graduate. It's been said that the accounting is a language of business. There's a lot of terminology. Even on my LinkedIn profile, I actually have English as a language. I know some French. I can read and write Hebrew, but I also have included accounting as a language. And accounting is a pretty powerful language. Helps you understand business. If you can understand the language, the terminology, you can actually do some things and read into the business, understand the operation. We also use accounting to gauge, analyze, and evaluate performance. It's not just throwing a bunch of numbers in front of you. The numbers have meaning. There's a language or terms that go with it. We need to interpret those and understand those terms and the numbers that go with it. And then we evaluate the business and saying, how are we doing? We're doing well, not so well. How do we think we're going to do in the future? We actually try to project. The accounting and financial statements actually do tell a story. The story it tells is how we're doing. How effective are we at producing, at making a profit? There's something called the triple bottom line. That's called people, planet, and profit. It used to be just profits, bottom line, how much do we make? Now there's a number of other factors that are coming into play as we analyze the effectiveness of an operation of a business. Again, for profit or not for profit, which are all businesses. And many are saying government needs to be run more like a business. Won't get to the politics. But the business of government, they have financial statements as well. But as we know, when we look at a financial statement, we are looking to follow the money. The money tells a story. We're analyzing on a balance sheet, things like cash and receivables and other assets, things we own. We're analyzing liabilities, obligations to pay things like accounts payable, notes payable, mortgages payable, things we owe. And then we'll have the equity, which is the profits, as well as the ownership interest that belong to the owners. Then we talk to an income statement, and the income statement, we have revenues and expenses that will ultimately give us net income, which we're going to look at in a couple of minutes. We're going to actually take a look at a Walmart income statement and answer a question. So I do have a question for you after we realize that, well, we're studying accounting for a reason. We're trying to understand the language, the business, evaluate, make decisions and evaluate, tell the story, and analyze how the money flows. So I got a question for you. We buy a $2 a gallon of milk from Walmart. Bottom line, how much do they make net of expenses from the sale? I'm going to ask that you text me an answer. Yep, this is the first quiz to see, hey, am I really listening to Dr. Scott? Is he telling me that, yep, I'm here, I'm engaged, I'm looking, I'm not chatting away, I'm not in my email, I'm actually listening, and go ahead and text to me an answer. So does Walmart bottom line make a buck after you sell you the gallon of milk? Does it make between 50 and 99 cents? How about between a quarter and 49 cents? Maybe between a nickel and 24 cents? Or is it under a nickel? By the way, in this class, you will find many of the questions I ask, the answer will be, it depends. And there are a number of answers. You can actually give a number of answers to this question and justify them. But I'm looking for a bottom line number here. So I'm going to take "it depends" off the table at this point. I'm just going to ask you, email me your last name dash Walmart and dash A, B, C, D, E, or F in your response. So we're going to go take a look. And to do that, we will go ahead and go to Walmart's income statement. Now, the SEC, the Securities Exchange Commission, has a website called EDGAR. Powerful site, powerful site. All publicly traded companies can be found there. We've got General Electric here in town. We have Sunoco in Hartsville. They're publicly traded. We have McDonald's corporate is publicly traded, but the McDonald's franchise here is locally owned, so it would not be on EDGAR. But we do have Walmart corporate, which owns all the stores, and we're going to be able to see and access their financial statements very gracefully, very easily. I'm going to show you how to do that. You'll have access to this PowerPoint, and if you want to do it yourself, which you ultimately will need to in this class, you're going to actually go into EDGAR. We're going to go into something called interactive data. We're going to download an Excel document. We're going to look at the income statement. We're going to calculate some percentages. We're going to take a look at gross profit as well. We're going to multiply that $2 by a percentage, and we'll come up with a bottom line. So again, make sure you text me exactly what your preliminary answer is, and then we're going to prove it. We're going to go through an analysis in EDGAR and go through the calculation. So I'm going to go ahead and go to another place, and we're going to go over to a Google search. Now, I've got the link there for EDGAR already in the PowerPoint, but if you don't have the link and you're not looking at my PowerPoint, let's go to EDGAR. I'm just going to type in EDGAR into the Google search. And it's pretty good. It says, oh, search and access sec.gov. Yep, that's the site, Securities Exchange Commission. But I'm going to jump straight to the company page. I mean, I could go to this search and access, or I can just go here and search company page. So once we get to the company page, we will have access and ability to look up a company. Now, I recommend typing in a ticker symbol. We know Walmart's ticker symbol is WMT. Ford would be F. That's the ticker symbol used in the stock exchange. But I'm going to just show you what happens when you type in Walmart. If I go into Walmart, you notice there are two Walmarts here. Okay, I'm going to search Walmart, and what's going to come up is Walmart Inc., SIC code, retail variety stores, and Walmart stores. And you might say, oh, that's easy. I want Walmart stores. Well, the reality is this is the Walmart we want that's going to get our annual report. That's the corporate Walmart Inc., not Walmart stores. If you typed in Target, you have 20 or 30 different Targets. So again, having a ticker symbol makes it a lot easier to find. So let's go ahead. Now I'm here looking at all kinds of filings, 8K, Def 14A. I've got 25 NSE, whatever the heck all those mean. I'm looking for the annual report, which if I type in 10K, which you might know is the annual report, you don't get very much. What's going on? Well, the syntax is very crucial when you're typing into EDGAR. If I type 10-K, it says, oh, I recognize those. I've got the annual report for every year submitted back in March of 2020, 19, 2018, 2017. I go to interactive data. I can actually take a look at, oh, I've got my cover page. I've got my financial statements. I have notes to financial statements, accounting policies, notes, tables, details, all reports. I'm going to jump to financial statements for a minute. 4 major financial statements. I know you see 5. And we'll talk more about that at a little later date. But the statement of income, consolidated statement of income is our income statement. Something about comprehensive income, which we will discuss, which we won't use in this particular instance. Consolidated balance sheet, shareholders' equity, and a shareholder equity parenthetical. And then we have a statement of cash flows. We'll be talking about all those statements actually in the next video. But I'm going to go to the statement of income. The income statement shows 3 years of data. So let's expand that a little bit. I've got net sales, and I'm looking at that. It says $567,000 in sales. And you're going to say, Dr. Scott, this is Walmart. I know they have more than $500,000 of sales. There's some houses going for more than $500,000 in town. So I'm looking at that saying, oh, it's in millions. So I have to add 6 zeros. So 567-762-000-000, $567 billion in sales. Actually, total sales is $572.8 billion. And then they got about $5 billion in memberships. What the heck is memberships at a Walmart? Oh, they own Sam's Club. Okay, we got membership fees. They're making $5 billion off the monies I give them every year as a membership fee. Well, if you remember, they're getting plenty of money for that. That's about 1% of what they're taking in, just under 1%. Then they have some of the cost of sales, also known as cost of goods sold. So the stuff they sell, like the gallon of milk, how much does the milk cost them to buy? But then they have other stuff, operating, selling, general administrative, also known as SG&A. We'll use that abbreviation, of course, SG&A. $117 billion. Operating income from operations of the stuff they buy and sell, almost $26 billion. They've got debt, interest, financing lease interest, interest income. We have interest net. They extinguished some debt. They had a loss. They had other gains and losses, income before income tax, provision. They have consolidated income for non-controlling. We're worried about the controlling interest attributed to Walmart. So we have $13.6 billion on sales of $572 billion. Okay, that's a lot of billions. Let's go ahead and make this a little bit easier. I could take a calculator right now and make some calculations and come up with some numbers, but I'm going to pop this in an Excel document. So let's put this in Excel. We'll view the Excel document. We'll retrieve the Excel document. Every one of these statements, by the way, will be on a separate tab. So if I open up that Excel document, you'll see that we have, I'm going to enable editing. We have our cover page here. We have the audit information, EY. I actually used to work for EY, Ernst & Young. We have consolidated statement of income. That's our income statement. These are the same numbers, but now they're in a spreadsheet. So all this stuff has been gracefully put there for us, and we're able to do some quick analysis. So don't worry about the razzle dazzle Excel. I hope you all have Excel experience, Excel knowledge. I'm going to go ahead and very quickly do some little bit of basic analysis, that slash that. And I'm going to turn this column into a percentage. I'm going to throw in an extra decimal point, and let's get a percentage on that. So we got 100% with an extra decimal. Now I'm going to copy this formula to, well, before I do that, I'm going to have to edit this formula. I always want my denominator to be this B6 cell, total revenues. So I'm going to put that $sign in front of it. There's some fancy ways to do that, but so we got 100%. I'm going to copy this all the way across here down to my net income attributable to Walmart. So what have I got? Let's do one more decimal point here. All right, so I'm looking at this, 100% of sales. This is also known as vertical or common size analysis. It's easier to look at an income statement or balance sheet when you have a 100% number like sales, and you can compare how would we do as a percentage last year to this year. How did things increase, decrease, change? But I'm just worried about the current year ending January 31, 2022, and I got 2.39%. So this is telling me if I have $1 in sales, about 75 cents went to pay for the cost of goods sold. If I have $2 in sales, I got about $1.50. So my milk probably cost $1.50 roughly, if it's consistent, on $2 of milk. But I go here, I'm going to multiply that out, equals $2 times my 2.39%. Okay. And I'm going to make this in dollars and cents right now. And I'm also going to copy this up. Control C, we'll go up there. And we'll go undo. All right, let's, if I can do this again. All right, Control V. All right, let's try that again. There we go. All right, so if I have a $2 gallon of milk, about, let's go another decimal point. Let's extend that over a little bit. And we'll get that over a little bit. So if I'm looking at my income statement, I've got about $1.98 in cost of goods sold. I got about 41 cents going back to SG&A, selling general administrative. If I go bottom line down here, we'll expand that a little bit. I got 4.8 cents going in Walmart's pocket. So you're saying, if I go back to my original question, say, okay, I'm doing the analysis. $2 gallon milk, Walmart makes less than a nickel. Now they make a lot of nickels. They have billions and billions of dollars in net income, but they're not making the buck on the milk or 50 cents on the milk or a quarter or even a nickel. They're making less than a nickel on the milk. So go ahead and text me your final answer. Just text it to my phone. I'll know you got it right. I know you saw the analysis. I know you made sense of that. All right. That concludes our first visual and our first video to give you some insight into what we're doing and how we're doing it. So hopefully you got a flavor of why you're studying accounting, and then some basic analysis of something called an income statement. We're going to dive deeper and find out where those numbers come from. How do we determine what we say as revenue? Do we record $2 the day we sell it? Do we record $2 when we get the inventory? Do we record the $2 for that gallon of milk when the credit card processes? Or if somebody walks in the door and says, you know, put it on my tab, we got a commercial account and they'll pay in a week, do we recognize that $2 a week from now? Those are the kind of decisions we're going to need to make. But I wanted to give you a basic bottom line introduction to a basic analysis and answer an accounting question. I thank you for your time. I look forward to future modules, and hopefully you can get to me with any questions you might have. We're going to be meeting once a week live. It is optional, but encouraged. And we'll have a theme and a topic to go with that. So I look forward to future interactions. If you have any questions, don't hesitate to reach out. Thank you for the time and opportunity to be of service. We'll see you soon.